Income Sharing Tax Credit Bill, first reading.
I call the Honourable Peter Dunn.
Mr Speaker, I move that the Taxation Income Sharing Tax Credit Bill be now read a first time, and at the appropriate time I will move that the bill be referred to the Finance and Expenditure Committee for consideration. Mr Speaker, income sharing for parents with dependent children has long been a core policy of United Future, and the introduction of this bill forms part of our confidence and supply agreement with the National-led government. The income sharing proposals that this bill introduces have been the subject of two separate rounds of public consultation under two successive governments. During the term of the previous Labour-led government, a government discussion paper was released. Again, this was part of a confidence and supply agreement commitment and followed full consideration by the Cabinet. The document canvassed people's views on the idea of income sharing, an arrangement which allows couples with children the option to split their income for tax purposes so that each partner is taxed on an equal share of their combined income. Because income tax rates rise according to the amount earned, under such a scheme parents could ultimately end up paying less tax if, for example, one parent works full-time and the other chooses to remain home to care for their children. Around 90% of the submissions on that first discussion paper were in favour of some form of income sharing on various grounds, including that it recognises the contributions of full-time parents in their homes and communities and balances the assistance that is available to parents who are in their workforce. And so I should acknowledge that at every stage of that process, the previous government was constructive and helpful and appeared to operate on a good faith basis, all of which makes the Labour Party's current opposition to this legislation that much harder to understand. I constantly receive very positive feedback from everyday New Zealand families about income sharing. New Zealanders react to hip pocket realities. They know that income sharing is good for them and that no amount of political doublespeak from politicians who might oppose it will stop them from recognising when something actually benefits them. The reality is simple. Up to 310,000 New Zealand families and nearly three-quarters of New Zealand children stand to benefit by anything up to $9,000 a year and have the choice of spending more time raising their children. And the key word here, sir, is choice. Those who oppose this bill are in effect saying they wish to deny New Zealand families a very helpful choice in the way they might wish to raise their families. The second consultation round took place in December last year during the term of the present government, in which we sought feedback on how income splitting might be delivered as an annual tax credit, similar to Working for Families assistance. Again, most submitters supported this approach. So the bill introduced today reflects public feedback from both consultation rounds and sets out who would be eligible, how the tax credit will be calculated and the rules around how to apply for the credit and how it should be paid. And I want particularly to acknowledge the support of both the National Party and the Maori Party during the development of this legislation and for its first reading today. Mr Speaker, in essence, under an income sharing arrangement, each partner in a relationship caring for dependent children under 18 years of age would be taxed on an equal share of their combined income. At the end of the tax year, they would be able to apply to Inland Revenue for a tax credit based on the difference between the amount of tax they would have paid on an individual basis and what they would pay instead based on half their combined income. Now, members may have noticed that I am using the term income sharing rather than the term income splitting that was used during the consultation process. Adopting the new term income sharing has been a deliberate choice. First, it is a term that more accurately reflects the status of couples with children as equal partners in raising their families. And second, it provides a more accurate description of the arrangement in law. The bill defines parents as being spouses, civil union partners or de facto partners, similar to the Working for Families legislation. They would have to be New Zealand tax residents for the whole tax year before they could claim a tax credit, and one of the partners would also have to be the principal caregiver for the dependent child or children. Under the provisions in the bill, the shared care credit would also be available to parents when they have separated, if they have subsequently repartnered and are sharing responsibility for caring for their child for at least 1/3 of the tax year. Mr Speaker, while the income sharing arrangement has the potential to benefit many families, it cannot and is not intended to be a suitable arrangement for all couples with children. For some, depending on their income, the option to claim the credit will be of marginal value. Nor will the credit be available for certain parents who do not meet the eligibility criteria, such as sole charge parents. I am aware that there will be some who will view this aspect of income sharing as an infringement on human rights, and some members have no doubt observed the report from the Attorney-General under Section 7 of the New Zealand Bill of Rights Act that accompanies this bill. On this matter, I need to make an obvious point. There is no one benefit that fits all. That is why we have targeted assistance for groups with particular financial and social needs. Arrangements are already in place for people who are sole charge parents, for example, through the childcare subsidy, the minimum family tax credit, childcare rebate and the domestic purposes benefit. But for many families, income sharing recognises the real financial choice that many couples with children often have to make about whether they work full-time and employ others to care for their children, or whether one partner stays home to care for the children, possibly on a part-time basis. The proposals that this bill contains will give parents more choice about their work and caring roles. And as such, those proposals give greater recognition to the equal role and value of both parents in raising their children. Too often we hear the lament from parents that they would love to have been able to spend more time at home with their children when they were growing up, but simply could not afford to do so. Income sharing extends that option to many more parents and gives them choices that they currently do not have, and it's not for this House, in my view, to continue to deny them those options. I hear the argument from those who oppose income sharing as unfair because they say not everyone will benefit equally. While differing income levels will mean differing levels of benefit, as is exactly the same with any income-related tax change, I cannot see any logic in denying parents the choice of income sharing if it suits their circumstances. After all, if they were in a business relationship, they would be able to share their incomes for tax purposes in precisely the way this bill proposes. Yet I do not hear any suggestions that that is unfair. Raising a family is surely the most basic and important business every one of us will ever be involved in, and it's surely therefore only right to give parents as many options as possible to enable them to do so to the very best of their abilities. Mr. Speaker, against that background, it's with considerable pride and pleasure that I commend this bill to the House.